magiliw, perlas ng silanganan, alab ng puso, sa dibdib mo'y buhay. Lupang hinirang, duyan ka ng magiting, sa manlulupig, di ka pasisiin. Sa dagat at bundok, sa simoy at sa langit mong bughaw, may dilagang tula at awit sa paglayang minamahal. Ang kislap ng watawat mo'y tagumpay na nagniningning, ang bituin at araw niya kailan pa may di magdidilim. Lupa ng araw ng walhati pagsinta, buhay ay langit sa piling mo. Aming ligaya na pag may mga api, ang mamatay ng dahil sa'yo.
Good afternoon, everybody. We'd like to welcome you to today's webinar entitled The State of Open Banking in the Philippines. This is jointly hosted by FMAP as well as Brankas. The topic today is quite appropriate given that the COVID-19 pandemic has really accelerated the need for digital platforms in the local financial space. We've seen quite a bit of innovation, and we continue to see much demand. Let's proceed with the program and perhaps call on Mr. Noel Reyes, FMAP President, for the welcoming and opening remarks.
Thank you, Tono. BSP Representative Director Mark Perez, Todd Schweitzer, CEO of Brankas, our partner in today's event, Dr. Ramos, CFA Society Philippines President and Group Head for RCBC Trust and Investments, Ms. Erika Dizon, VP and Business Development Head, FinTech Group of UnionBank of the Philippines, my fellow FMAP members, our partners in the industry, colleagues and friends in the markets. Welcome to the State of Open Banking in the Philippines, Lessons from the Global Market webinar. The year 2020 marks another major record in world history as the year to be remembered, where mankind took and is taking the wrath of nature and of God for complacencies and excessiveness, and where we have to institute a lot of changes to cope, survive, and remain sustainable. Change happened and is still happening in the way we live, work, and relate to one another. Governments, businesses, families, ordinary peoples of the world, rich or poor, without regard to race, color, religion, or culture, need to adjust and to continue to adjust as the light at the end of the tunnel for a vaccine is still an uncertain journey. For most in the world, WFH, or work from home, is a new term that has become common and widely acceptable. Work from home allows continuity of being productive in a safe containment and secured health environment of one's home. With it comes the need for no contact communication, transacting, and relating. With it comes the need for strong internet and data movement capacities. With it comes the need for opening up banking away from the traditional brick and mortar structures and physical dealings. And with it comes the increased focus in digital banking. The new normal for sustainability of banks is embracing digital commerce and promoting the need for open banking. Even after a vaccine is discovered, this will remain inherent in our culture as people discover the convenience of transacting online from the comforts of one's home or from anywhere in the world for that matter, as long as one has a mobile gadget and strong internet connection. Those that have had no prior tech savviness realize the relative ease within which to execute banking transactions, as app development has also come to fore with a lot of improvements and efficiencies. To this light, banks have currently expanded their investments in IT in the race to provide better online services. We can say our banking industry is still in the early stages of full digital development, but we are getting there, and the desire to get there is getting stronger. The developed countries are more advanced in this field, and for a global perspective, we turn to Mr. Todd Schweitzer of Brankas to show us where the world is already in products and at what state a region and we as a country are in. Of course, he will throw in what capabilities and products they can offer to us here that could create avenues towards digitalization. From the local perspective, we have the privilege of hearing from one of the pioneers and first movers in the financial sector with regards to embracing digital and staff or employee-less banking. We hope to hear the path and experience of UnionBank of the Philippines on this matter, courtesy of the only rose among the thorns of speakers and panelists, Erika Dizon. Indeed, even the BSP is working on improving efficiencies and client protection as it is coming out with new rules to open and promote digital and virtual banking. I believe a circular is in the works for its final release and implementation soon, and it includes reducing the capitalization requirements to foster the growth of this industry. We hope to hear more from Director Mark Perez on this during his presentation. And finally, but not definitely the least, to complete the picture, we refer to Dr. Rob Ramos to present us with the opportunities that are brewing or are being created in the wealth management side with regard to preferences and choices of customers amid the more pronounced need for digital banking. Let me now turn you over to our host to introduce our distinguished guests and to begin our main event. Again, thank you all for joining this webinar.
Thank you so much, Noel. So this afternoon, I have the pleasure of introducing our four distinguished speakers, starting off first with Todd Schweitzer, who is co-founder and CEO at Brankas, which is the leading open banking enabler in Southeast Asia. Todd has held senior roles in private equity, management consulting, spanning technology, public sector, and financial services. He holds dual bachelor degrees from the University of California and a master's in public policy from Harvard. We likewise have Erika Dizon, who is Vice President and Sales and Business Development Head at the FinTech Group of UnionBank of the Philippines. She has been in banking and finance for over a decade, has held various posts both in local and multinational banks, with a vast experience in the fields of debt and capital markets, FX sales trading, derivative structuring, corporate banking, and investment banking. We then will move on to Mr. Mark Anthony Perez from the Department of Supervisory Analytics of the Bangko Sentral ng Pilipinas. He is the current director of the Department of Supervisory Analytics, or DSA, of the Financial Supervision Sector of the Bangko Sentral ng Pilipinas. He likewise oversees the sector's SupTech initiative, is the vice chair of the BSP's Data Governance Council, and leads the Information Exchange Committee of the Financial Sector Forum. And lastly, as mentioned by Noel, we have Dr. Robert Ramos, who is the first Senior Vice President and Group Head of RCBC Trust and Investments. Mr. Ramos has years of banking and finance experience working for local and foreign institutions. He has experience in the fields of trust and asset management, product development, treasury trading, fund management, and marketing and relationship management. Before we turn over to the distinguished speakers, we do have some housekeeping rules. So with this regard, please note that we will be following the structure of first an introduction about Brankas to be conducted by Mr. Todd Schweitzer. Then a presentation on open banking, specifically with an outlook of what is happening in the global market and the Philippine landscape, to be once again conducted by Todd Schweitzer. We will then move to Ms. Erika Dizon to be discussing the open banking and financial institutions. Mr. Mark Anthony Perez will take the floor after that, looking at the policy side of the industry. And lastly, Mr. Rob Ramos will discuss about the opportunities in wealth management. Likewise, we seek to inform all participants that we would want this to be as interactive as possible. So do please drop any questions that you may have through the Zoom Q&A box at any point of the session. So without further ado, if I can turn over to Mr. Todd Schweitzer.
Great, thank you, Luis, and thank you to the FMAP organization and for all the attendees today. I'm very grateful to participate and co-host this session along with the FMAP group, and really looking forward to sharing a little bit about open banking, learning from our other panelists, and also learning and responding to your questions as well. So I'll echo what Luis said. Please ask questions. This is meant to be interactive. It's a closed session for the FMAP members, so please make this time yours and ask away, because a lot of these concepts are new to many of you, I'm sure, and this is a very new, set of technologies and new set of products and new set of opportunities in the financial services industry. So I encourage you, as Luis said, to ask questions and engage. What I'm going to do in the next 15 minutes, I'm going to move the agenda just a little bit, because I think it's important, before I even introduce Brankas, before I describe the details of open banking, I think it's better to just dive right in and show what are some examples in the real world, in the Philippines and elsewhere, of what open banking is and enables today in terms of end user products. So let's move on. Yeah, so next slide. So I'll start with just a view of what is open banking in the real world today. How is this concept of open banking, which you may have heard, what does it look like in real world applications used by real people commercially today? I'll attempt at a very basic, non-technical definition of open banking. I want to describe why open banking matters, right? Because there are many participants. There are the incumbent banks, there are newcomer digital banks, there are fintechs, there's the end customer, which may be SMEs who during the pandemic are figuring out how to go online and open up a Facebook shop for the first time, to the end consumers, to the unbanked that are possibly considering shifting to their first savings account online. In many ways, one of the few silver linings of the pandemic is it's been a forcing mechanism for people to adopt digital financial services for the first time, especially in the Philippines. And so I think we'll go into a little bit of why open banking matters, and then I'll close by sharing a little bit about Brankas, our mission, and how we're helping to promote product development and ecosystem development in open banking. Next slide. So first off, shout out to UnionBank, because this is, I think, really a best-in-class example of what open banking looks like in the real world. So this is screenshots from the GCash app, just from like a month or two ago, right? What I am able to do in the GCash app with UnionBank or with BPI is I can do a cash in by pulling funds, by linking my UnionBank checking account and pulling funds into my GCash wallet, by all taking place inside the GCash app. So I don't need to push funds from a UnionBank branch. I don't need to go to 7-Eleven. I don't need to do a top up with debit card, which may cost 3% in interchange fees. What I'm doing in these screens is I'm choosing to link my UnionBank account. I enter my online banking username and password. This is called the authentication step. So I'm verifying my identity that yes, I am indeed Todd, a UnionBank customer. I get a one-time password to confirm that identity. I then can see the accounts that are linked to my account. I choose which account I want to link, and then I hit approve and I'm done. And then for subsequent transactions, I basically just choose the account I want to debit. I choose the amount I want to transfer into GCash, and it immediately transfers the funds. This entire registration process is done by API technology. So this is the GCash app communicating in real time with the UnionBank core banking system through the APIs that Erika's team have built to do to initiate a real-time transfer and real-time authentication. So this all sounds very, very smooth, and it is extremely smooth. I mean, this whole process takes about 30 seconds or less, but there's some real interesting technology behind the scenes. What this is doing is enabling UnionBank to give their customers access and interaction with their accounts through third-party channels. So GCash becomes a means for me to be a UnionBank account holder and use my UnionBank account, even though I'm not sitting inside a UnionBank branch or a UnionBank application. And that's a big deal from a bank's perspective. That's, from banks that are typically, approaching this with more of a vertically integrated mindset. So this in the European sense would be called the PISP model, the Payment Initiation Service Provider. So in this case, the API technology is allowing for the customer to send a payment using their bank account, even though they're not inside the bank's app. Next slide. Another example is account opening. So this is also GCash example, but now with CIMB. So what I find so fascinating here is CIMB Philippines, a huge volume of their new customers onboarded as CIMB savings account holders are acquired through the GCash app. So what do? Inside the GCash app, I tap the Save Money tile, and then I start the process for opening a savings account, and I complete that process using the KYC that I did as a GCash wallet holder, and then I have a savings account linked to my GCash app. Now think about what this experience is like compared to your typical account opening process, which involves a stack of papers and queuing up at a branch, and probably you don't get same-day account opening. I mean, I won't name any banks, but pick your large Philippine bank and think about what the process is today for account opening versus this. So this is also open banking. This is CIMB providing an account opening API connected to the GCash app that allows GCash customers to start and complete the process for opening a savings account, and then their savings account remains linked to their GCash app until they choose to separate it, right? And then it's CIMB's responsibility from that point forward if they want to upsell or offer some additional services. But the hard part, the customer acquisition, has been done by having this account opening API. Next slide. So third is statement aggregation. So this is coming from the UK. So as you may know, in the UK, there's actually a requirement for banks to provide open APIs. So what that means is the banks are required to provide a basic set of API products for account statements and for payments. So what does this mean in real life? What this means in real life is this is the Lloyds Bank app in the UK. So I open the Lloyds Bank account app, I tap on the open banking button on the left, and then I see a list of all available retail banks in the United Kingdom. And then I choose my NatWest account. And then from there, I click continue. I'm authenticated the same way as I authenticated as a UnionBank customer, right? So through my username and password. And from that point forward, I have a portfolio view of all my accounts outside of Lloyds Bank that I can view inside the Lloyds Bank app, right? So this is a top-down mandate from the UK, but this allows for me as a customer to have a portfolio view of my accounts, balances, and transaction history all in one place. Next slide. So this also applies to corporate, right? So Brankas has a Singapore entity, and we connect with Xero. Xero is a cloud-based accounting app, very nice. And we use UOB as one of our accounts. And so we have a transaction feed coming from UOB into our Xero accounting app, which allows for basically automated reconciliation, right? So this is hugely important today, especially for SMEs that are learning how to accept online payments and need to figure out how to reconcile those online payments, right? So having a statement feed, and UnionBank is one of the few banks in the country to actually make a statement feed available, so kudos to them. But by having a statement API, especially for corporate clients that are accepting online payments, it makes life so much easier. And for us in Singapore, I mean, we'd have a much more difficult time handling, matching payments to invoices if we did not have that UOB API integration. Next slide. So beyond statement feeds, just even authentication, right? So in Singapore, they've recently rolled out using the national ID, which is called SingPass. I can actually log into my OCBC bank account using my SingPass, my national ID. Now, of course, the Philippines has a little bit of a road to go in terms of a national ID and a single authentication. But this is what the future can look like, right? We know Thailand right now is rolling out its national ID program called NDID, and it will allow for third-party authentication. So if I'm already KYC'd with Bank A, and I want to open an account with Bank B, all I have to do is let Bank B know that I'm already account holder. They're going to use an API to verify that I'm an existing account holder, and then I can just proceed with the account opening without needing to duplicate my ID upload and signing of documents and It really streamlines the process in that way. Next slide. Okay, now this is financing through an e-commerce merchant site. So now we're in Indonesia. Now this is, Tokopedia is one of the largest e-commerce marketplaces in Indonesia. And what is so fascinating about this in Tokopedia is, as a seller on Tokopedia, I now have access to 11 different lenders who can provide me inventory financing. And what's remarkable about this is not simply lead generation. I, as an SME, can do end-to-end sign-up, origination, and funding of the loan into my Tokopedia wallet, all while inside the seller page of the Tokopedia app, right? And what I find so interesting about this example in Indonesia is, look who's competing for the seller's business, right? You have BFI, which is a multi-finance. You have 4 different banks competing alongside 4 different startups, and then even one of the e-wallets, Ovo, is now offering a seller financing product, right? And again, I, as the Tokopedia merchant, I'm not being redirected to some landing page. I'm definitely not filling out any paper forms. I'm signing up and agreeing to, I'm reviewing my options from the various lenders. I'm getting approved and underwritten for the loan. I'm getting immediately funded for the loan through a disbursement API. And it's all taking place inside the seller page of the Tokopedia app, right? This is not fantasy, like this is happening today. It's beneficial for the seller who has now easy access to seller financing. It's beneficial for the lender because they have awesome distribution. They don't have to use brick and mortar or third-party lead gen. And it's great for Tokopedia because they're getting more volume, more payment volume, because their sellers can do more. So this is all powered by what is effectively open banking APIs. It is financial institutions providing the technology infrastructure to allow for third parties to either be distributors or product partners for financial products. Next slide. Okay, the last example I'll show is Starling Bank in the UK. So Starling is one of these digital-only banks, and what Starling has done is built an entire financial services marketplace. And they have retail products, they have SME products, and basically they treat this like this is a proper platform model. So they're taking platform fees from their third-party partners, who can then acquire customers, all sitting on the infrastructure, the deposit accounts of Starling Bank, right? And what's remarkable, I think, on this is 33% of Starling's SME customers are now using at least one of the third-party integrations. And all of this, by the way, all of these apps and integrations can take place inside of the Starling Bank app. So just a taste of the future. I mean, this is coming to the Philippines. We know of some banks and financial institutions that are thinking about building a financial services marketplace. It's not quite here yet in the Philippines, but I think this is a taste of what's to come. Next slide. Okay, so what is open banking? I will just go through, this is my sort of rough definition, but I just want to clarify that open banking is more than a policy mandate, more than technology. It's really an ecosystem, and it's, frankly speaking, it's a new economy. It's a new sub-economy within the financial services industry. So it is the technology, which is powered by APIs. Next slide. It's the products, which can be authentication, payments, account data, even opening new accounts. It's also the policies or the policy framework, which in this case would be the BSP, the Data Privacy Commission, industry-wide agreements among FMAP or among the BAP that enable customers, always with their consent, always with only if the customer authorizes it, to securely access financial services using globally accepted IT standards from qualified third-party providers. Okay. Next slide. Yeah, I'm just conscious of time because we have lots more to share. So typical open banking products, like what can this look like for financial institutions in the Philippines and elsewhere? It can look like account information and statement sharing. The main use cases there are for alternative lending. As we know, any consumer SME loan, you're usually delivering your bank statements. And so this allows for a verified and real-time way to access your potential borrowers' accounts with their consent. Of course, there are many, many different payments use cases. I think it's worth noting, in the Philippines, the vast majority of online transactions are done by bank transfer, right? And I'm sure most people on the call have done a payment that involves sending some screenshot of your deposit slip, and then your merchant needs to reconcile that. And so there's a number of different payments use cases for banks, e-wallets, e-commerce site, insurance, as well as corporate use cases. Account opening, loan origination, as well as authentication, right? Skipping or being able to bypass the really frictionful KYC process by using third-party sign-in. Next slide. So why does open banking matter? It matters for institutions because it generates new revenue streams. And Erika can speak to this, how UnionBank actually sees this not simply as a kind of a partnerships engagement, but actually a way to unlock new sources of revenue for the bank. It's definitely good for customer engagement. I can say as a UnionBank customer, I personally am much more inclined to use my UnionBank account because they offer me more places to use it, very simply put, right? It allows for product innovation, which I'm sure Erika will talk about, being able to work with FinTech partners to build new products, and it allows for new data sources. For customers, it's flexibility and it's choice, right? It allows customers to choose how and where to share their data. It allows them to choose how and where to access their financial products or purchase a new financial product, and it reduces reliance on intermediaries and agents. It allows the customer to interact directly with their account without needing to go through middlemen. And for newcomers, it allows for partnerships, it allows for targeting neglected customer groups, and it allows for testing of new commercial models, right? That may be a subscription instead of transaction fee, or you know, there's a number of examples there that I can share, but it really benefits the whole ecosystem. Next slide. So our recommendations, and we've communicated this to the BSP, and you know, I'm really encouraged by what the BSP is working on in terms of open banking guidelines, but we encourage an opt-in open banking model. Not all banks are going to, frankly, agree with the premise that having an open model is net positive, and that's okay, because there are plenty of banks, especially in the mid-tier, that are hungry and want to play a new game and want to partner with fintechs and want to build new digital banking products. And my recommendation is encourage that, provide the guidelines, and allow for the new sprouts and new innovation to take place. I think, of course, there needs to be rules around IT security, data protection, and always user consent. None of these activities should take place unless the user explicitly or the customer in this case, explicitly authorizes. And then we would propose an industry-led and BSP-supervised open banking pilot that allows to gauge demand among Filipinos and inform policy development. Next slide. So just a couple minutes on Brankas. So what Brankas does is basically, we think ourselves as the last mile open banking enabler. So on the one side, we work with banks to help them deploy open API products. And on the other side, we work with fintechs to help them plug into open banking APIs and build new products. And so those consist typically of transaction APIs, retail APIs, and online payment solutions. And we can skip through, yeah. I'll just share briefly on this. We're a team of about 70. I'm based here in the Philippines, but we operate across Southeast Asia. So in Indonesia, Singapore, Philippines, Vietnam, and Thailand. And next slide. Yeah, so a couple examples are there, which I can share later if you guys are interested. Moving on. Next. The only last thing I'll mention is that Brankas is also a member of APIX, which is a region-wide initiative really sponsored by MAS as well as the ASEAN Bankers Association to promote FinTech and financial institution collaboration. So Brankas is on the advisory council. We're a technology partner. And then we also participate in supporting hackathons for financial institutions that are looking to do pilot or test engagements with their fintechs. So if that's something you're interested in, not just in the Philippines, but regionally, that's something that Brankas plays a role in. Next slide. So if you want to get in touch with me after the event or anytime, visit our website or email me directly. Happy to chat more. You know, our mission is really to drive awareness and adoption of open banking, and we're happy to help any way we can. So with that, Luis, over to you.
Thank you so much, Todd. I'm sure there bound to be quite a number of questions about what's happening in the rest of the region, and especially in the more developed countries. So once again, we do encourage participants to send over their questions, and we look forward to an interesting panel discussion and Q&A towards the tail end of this webinar. But without further ado, we do want to turn over the floor to Ms. Erika Dizon of UnionBank.
Thanks for that, Luis. And thanks, Todd, for using UnionBank as an example multiple times. It definitely makes my job a lot easier. But in any case, I'd like to show my first slide. So Todd discussed earlier what open banking is, which is essentially the sharing of information, right, across various systems and various platforms. And for my part, I'll be discussing how open banking is already affecting banks, financial institutions here in the Philippines and also abroad. And later on, I'll discuss what are the effects that we're seeing right now in our banking customers. Okay, so first and foremost, let's get at it. In terms of the effect of open banking to FIs, obviously there will be a greater push and focus in data. So as more information comes in, the expectation is us banks will become more savvier in analyzing and understanding our customers. So other than that, to put it more specifically, I would say that we can use that information for better fraud detection, for other risk modeling types, which I will discuss later on. And we can push products better to customers and eventually increase the customer lifetime value, which I think at this point, most of us are looking into right now. So actually, the increase in data coming from open banking, it doesn't just benefit us financial institutions, but I'll give examples as well as how it's affecting policy in other countries. So for example, JP Morgan in the States in particular is actually looking at 30 million data points of consumers in the US, and is cross-referencing that with the economic statistics. So they're doing so hand in hand with the US government to come up with policies. So it's because of the big data coming from open banking that we see these changes offshore. And it's not just about us banks in isolation, but it's also helping the policymakers come up with better rules for everyone. So that's what we want to focus on in terms of data-driven focus coming from open banking. So there's fraud detection, risk modeling, and of course, checking more in which products we could push for customer lifetime value. Now, speaking of getting more information and getting focused because of open banking, we believe that with open banking, there's a slew of information which will give banks a better understanding of customers and their needs, and therefore we can easily come up with new products in a more agile fashion. So what does this mean to us? True, that means that consumers will have more choices, and as well we'll also see an increase in competition among each other, unfortunately, but that's a fact of life. But anyway, with more information and new products, we expect that we'll start to see a bank's role will shift markedly from what it is now into something else in the future. And with that, we will also see new financial ecosystems, which I will discuss later on. So with the deconstruction of the firm coming from more information, more data, of course, we have to think that in 5 years, well, 5 years ago, people were thinking that there was going to be competition between banks and FinTechs, so to speak, but instead we've seen across the years that it's become more of a collaborative effort between those two entities. And the reason for that comes from my second point, really, which is because banks would also like to focus more on our core products, but then times have changed, things have evolved, new products are coming up left and right, and new ecosystems have to be addressed. And so we can't do this alone, and that's why we see a shift in the type of engagement with FinTechs, which is to partner with them. UnionBank has started their own FinTech group 3 years ago, and because it's precisely of this mindset that this group was made. So Brankas is actually an example of one of the FinTechs that we work very well here with in the Philippines, as well as GCash, among others, and it is because of this guiding principle that we've done so. And moving on, in terms of spanning sectors, what exactly do we mean by this and how banks will get affected? So with open banking as a principle, meaning to send data and information across, it's really not just about banking anymore. In fact, we see this as a trend in UK and in Australia, wherein information is sent across insurance, utilities, and even pension. And the rationale really for that is the more information that is collated, we better understand our customers, then we could give them better and more personalized services, maybe a better insurance policy that fits me precisely, wherein not one thing is good for everything, right? It's not a one-all approach for everyone. So we'll see more personalized solutions, and really banking is no longer a vertical thing, but it has spanned across sectors, and we'll likely see it move into a horizontal approach into other industries. So yeah, all in all, those are the things that we see coming of open banking and how it will affect the banks and how we do things, how we push products, how we view our customers, how we engage with other partners, and how we think that it will span across other industries. So again, I'd like to make another example other than Brankas. In the States, Goldman Sachs has in fact partnered, and then they eventually bought a company which is called Clarity Money, which is a budget planning app. And eventually they've inputted this app and its capabilities into their online banking. And this was done in 2016. So we see that those are examples of how open banking is evolving in other countries and how they're actually executing upon it, specifically in terms of partnerships. Now, if we think about the deconstruction of the firm and how open banking really is also going to affect FIs, in the UK, as Todd mentioned earlier, wherein open banking was already enacted last year, the expectation is that they will be able to generate a revenue of around $9 billion, according to the American banker, coming from the new products because of open banking, and they expect this to come in 2022. So it's really only just a matter of time. Next slide, please. So this particular slide shows you the points that I've discussed earlier and how it's being done in other countries. But I'd like to point out first new ecosystems, which is a great example. It's an example coming out of China, and I'm not sure if everyone has heard of Alipay. I think everyone has. So Alipay is a great example of how the transfer or the sharing of information has made it evolve not just as a financial platform, but as sort of a catch-all. So nowadays, Alipay will allow you to do transfers of your money. It will also allow you to pay for groceries, pay for your takeout, and it's evolved to be much more than that into a lifestyle platform, wherein, funnily enough, in Alipay, it will also allow you to look for dates. So it has also evolved into a dating app. So that's an example of how open banking has forced, not necessarily forced, but has changed or evolved institutions offshore to become something else and to build something new. Now, going further south, in Africa in particular, I'd like to speak about how there is changing credit models in that specific area of the world. So in Africa, we also have problems with unbanked, and it's an ongoing issue. And actually, in spite of that, there is a large market in Africa that have great use for smartphones. So what people decided to do was to use the data or the information coming from these smartphones to make a new credit model out of it, and to have new underwriting models so that these people who were previously unbanked can get loans and eventually be part of the formal system. So an example of that is Tala. They do that in Africa. And funny enough, Tala is also here in the Philippines because they understand that, the model is the same in Africa as here in the Philippines, with the number of unbanked and the population being smartphone savvy. So these are two examples of how open banking has changed and transformed, issues that are real in the global economy. So I'd like to go to the next slide, wherein I will discuss what is the effects of open banking, not just on the banks per se, not just with FIs, but into our own customers. So with the onslaught of, new products coming from a lot of data, things have evolved. So in the past, I wouldn't be able to book a ride at any moment that I want. I need to go across the street and do that and wait for somebody to pick me up, either a taxi or whatever. So as services evolved, so do customers and so do their mindsets, right? So I've spoken to a lot of tech companies, and the reason they're very, very successful, you see that in Amazon and Facebook and the number of users and customers that they have, is because they always put the client journey in the forefront. So I think we put that specifically in our own mindset. So I'm speaking now of UnionBank and how we decided to change the way of thinking. Instead of just focusing all the time on pushing products in an agile way, we decided to put the customer-centric approach first. So you will see that, and hopefully you do see that. If you do try our app, our online app is very, very easy to use. And it was also because of the guiding principle to put the customer in the center. So aside from that, the changing needs and the wants of our consumers, we do expect that as they have more choices, not just from banks, not just from fintechs, not just from challenger banks, is they will also start to realize the value of their own data. And because of that value, they will start seeking other products that have reduced transactional costs and less, so to speak, friction among platforms. So a perfect example is of that is APIs, which Todd has discussed earlier. But instead of just leaving at that as having APIs, in UnionBank, we have applied an open API approach, wherein we reduce friction in the sense that we don't necessarily require you to open a bank account with us for you to test our APIs and see whether it's useful for you or not. So that's why we want to remove friction as much as possible, have our customers test our products at the very easiest way. And because we remove friction in that sense and not just in costs, we're able to always put the customer and their experience and their journey at the center. And lastly, how do we expect our customers to change as well because of open banking? And again, with the onslaught of information and data, there should be heightened transparency. So with the ability to see data across various platforms and see the bigger picture, the expectation is that our consumers will able to understand their own financial position and then create or make better financial decisions. So I'm also a victim of this. I think that I have a lot of money to go shopping, but actually when I look at the whole thing in my spreadsheets, which I have to check in my desktop, I find out I actually have more expenses. So yeah, so open banking will help with that. And eventually it's not just myself, but more and more people will get into that habit of making better financial decisions. And so all in all, with what I just said today in terms of how open banking will change how bankers and how banks do things and how they send out products and how they think of engagements with other providers, not just within themselves, siloed as an isolated company. The next real thing that I wanted to leave everyone with is this. Next slide, please. That yes, open banking is very important. Todd and myself are, I think, are proponents of this, and I hope you have gained more information from the examples we've given and with our own experiences coming from Brankas and coming from UnionBank. But open banking is a thing. Yes, it's in other countries, they're executing it right now. And it's also starting to slowly trickle in here in the Philippines. Now, it's really not a question of if, but open banking is really just a question here, at least here in the Philippine setting, of when. So with that, I'd like to move back the floor to Luis.
Thank you so much, Erika. I mean, quite enlightening on how exactly technology is not only changing the way we do business, but even how we're thinking about doing business. So quite insightful, and we really do thank you for the time that you took presentation.
Thank you.
So for now, we move on to Mr. Mark Perez to give us a presentation on the regulatory and policy side.
Thank you very much, Luis. Can you hear me loud and clear? Luis, can you confirm that you can hear me and see my slide?
Yes, you're coming in perfectly. Thank you.
Okay, thank you very much. So good afternoon, everyone. Good afternoon, Mr. Noel Reyes. Good afternoon, Todd. Good afternoon, fellow speakers and everyone who's on the call right now. Thank you for this opportunity for us to be able to share the BSP's view on open banking and the state of open banking in the Philippines. Let me start with BSP's digital agenda. We at the BSP recognize the crucial role that technological innovations have to enhance the delivery of our mandates as the new developments arise. We are committed to pursuing a cash-light economy as a goal towards improving financial inclusion. The Philippines has pushed the advancement of digital payments by working hand in hand with other regulatory bodies, business leaders, and stakeholders across the financial sector. With the passage of Republic Act 11-11 of 2019, which amends the BSP Charter, financial inclusion and its complementary objectives of financial literacy and consumer protection are no longer just strategic advocacies, but have become a mandate of the Bangko Sentral. As these initiatives further progress the country's digital agenda, the need for financial consumers' awareness and trust for digital financial services is paramount. To achieve this, BSP has issued policies that democratized access to transaction accounts, expanded the network of low-cost financial touchpoints, and issued a framework for safe, efficient, and retail payment system. These initiatives are underpinned with efforts for stronger cybersecurity, financial and digital literacy, and sound market conduct. Ultimately, we believe that the presence of a supportive yet vigilant regulator, as well as a responsible and consumer-oriented financial system, will be the key to strengthening our stakeholders' trust in the country's digital agenda. Long before FinTech and regulatory sandboxes became buzzwords, the BSP already introduced what we call the test and learn approach sometime in 2004, when Smart first introduced its e-money product. Now, this technique is popularly known as the regulatory sandbox. The BSP maintains a collaborative culture by fostering a flexible test and learn environment that allows market players to develop financial innovations, while at the same time providing regulators with a better understanding of new operating and business models so that the appropriate regulatory approaches can be adopted. Private sector entities can take advantage of these enabling policies and provide the public with welfare-enhancing products and services. Private sector-led initiatives, such as adoption of open banking APIs, can actually help improve the financial landscape where the regulators now operate in. The role for the policymaker like us is to find the right balance such that the rules are not burdensome and while ensuring that an entry would not entail financial stability risks. Over the past couple of years, innovative digital solutions have transformed the delivery of financial services by offering alternative and far convenient ways of executing financial transactions. It has empowered unbanked and underbanked to participate in the economy through easier access to financial services. Indeed, FinTech players are moving ahead of the curve by developing solutions that aim to expand delivery channels and trim unnecessary processes towards providing greater efficiency and convenience for customers. The BSP has been highly supportive of such endeavors, and as we view innovators as enablers of financial services to help boost our financial inclusion agenda. Let me share with you the approach of the BSP in regulating fintechs, which is shaped by 3 principles. First, collaborative engagement with the supervised institutions, other regulators, and stakeholders. Second, capacity building initiatives within and outside the BSP. Third, commensurate regulations crafted to nurture a regulatory environment that allows innovations to flourish, yet still mindful that risks must be effectively managed and that the financial system remains safe and sound. It is the policy of the Bangko Sentral to provide an environment that fosters competition, financial inclusion, and product innovation, while at the same time safeguarding the integrity and stability of the financial system. Thus, the BSP recognizes the benefits of open banking to encourage the banks and their partners to take advantage of digital innovation and opportunities to offer and promote better access to customer-oriented services. A report from the Basel Committee on Banking Supervision last November 2019 noted that while the sharing of bank-held customer permission data with third parties has been taking place for over so many years, the increased use of digital devices and rapidly advancing data aggregation techniques are transforming retail banking services across the globe. This sharing of customer permission data by banks with third parties is leveraged to build applications and services that provide faster and easier payments, greater financial transparency options for account holders, new and improved account services, and marketing and cross-selling opportunities. Consequently, the number of jurisdictions have adopted or are considering adopting open banking frameworks that require, facilitate, or allow banks to share customer permission data with third parties. Still quoting from the same study, open banking frameworks vary across jurisdictions in terms of stage of development, approach, and scope. Authorities have either taken or are considering a range of actions related to open banking in their respective jurisdictions. Some jurisdictions have taken a prescriptive approach, requiring banks to share customer permission data and requiring third parties that want to access the data to register with a particular regulatory body or supervisory authority. On the other hand, other jurisdictions have taken a facilitative approach, what Todd earlier mentioned as an opt-in approach, by issuing guidance and recommended standards and releasing open API standards and technical specifications. Still, other jurisdictions follow a market-driven approach. We're currently having no explicit rules or guidance that require or prohibit the sharing of customer permission data by banks and third parties. Open banking brings potential benefits, but also risks and challenges to customers, banks, and the banking system in general. Many banks would acknowledge that open banking has the potential to transform banking services and the bank business model. However, banks and bank supervisors will have to pay greater attention to the risks that come with the increased sharing of customer permission data and growing connectivity between banks and various parties. Depending on the jurisdiction, among the challenges that banks and supervisors have faced or will need to face or are about to face are the following: the need to update data privacy and bank secrecy laws, requiring greater regulatory coordination, since in an open banking ecosystem, the participants are not just banks and non-bank supervised institutions, but third parties and fourth parties are as well, which may not necessarily fall under the regulatory ambit of the central bank. Changing business models and pressure on competitiveness and profitability on the incumbent banks. Data and cybersecurity issues. The time and cost to build and maintain APIs, and the lack of commonly accepted API standards. Limited oversight of third parties, and this issue is not just for regulators, but also for banks who might no longer have contractual control over the relationships between them and the third party or the fourth party that uses their data, depending on the framework that is used. Assigning liability in the event of financial loss or data loss, and possible exposure to reputational risks associated with activities performed by third parties or fourth parties. That said, BSP views open banking as an opportunity and has looked at the Philippines for its readiness to accept this new innovation. It is the policy of the central bank to provide an environment that fosters competition, financial inclusion, and product innovation, while at the same time safeguarding the integrity and stability of the financial system. This involves the development of innovative financial services that aim for greater financial transparency and consumer protection, by giving customers better control over their personal data and improved access to financial products, even beyond bank-owned channels. The BSP envisions an open banking ecosystem which espouses a consent-driven data portability, interoperability, and collaborative partnerships among incumbent financial institutions and new third-party players. Through open banking, third parties such as FinTechs will be allowed access to financial information needed to develop innovative applications and services and provide account holders with greater financial transparency options. However, these benefits should be weighed against the associated risks, particularly on data security. As customers and businesses use third-party applications to access personal and critical data, the security of the data must be preserved and addressed. It is for these reasons that a policy on open banking needs to be developed to lay down technical, security, and governance standards to be observed and adopted by BSFIs or BSP supervised financial institutions intending to publish open APIs. To this end, the BSP has augmented its own international resources by engaging with subject matter experts on its journey towards developing the Philippines' open banking policy. Allow me to walk you through the journey so far. In December 2019, the BSP team completed its initial research and consultations with subject matter experts brought in specifically for this purpose. In January 2020, a technical working group was formed to work with the SME team on specific deliverables that would lead to the definition of the open banking policy framework. Between April to June of this year, in the middle of the lockdown in Metro Manila, the TWG conducted digital surveys among industry participants to gauge industry openness and readiness. In July, the results of a comparative study of frameworks across similar jurisdictions, such as Malaysia, Indonesia, Singapore, were completed, and these provided inputs on how the policy will be crafted and rolled out. Thereafter, the TWG focused now on crafting the final draft of the policy. It is expected that the exposure draft and consultation meetings with the industry will be done in the next couple of months, all the way towards the end of the year. At the beginning of 2021, it is expected, or rather targeted, that the Philippine open banking policy will receive approval from the Monetary Board and issued as a circular. Here are some highlights of the open banking survey, which was sent to about 85 banking and non-bank respondents, of which 61 respondents responded, of whom 80% came from banks. Majority of the respondents have not worked in an open banking environment. Majority believe that they have the right team to implement open banking. More than half, or about half, have already plans to invest in open banking, while less than a tenth, about 7%, have no plans at all, and the remainder are at various stages of consideration. Majority of the respondents expressed interest in participating in an open banking platform, and majority already have APIs capable to allow industry. The survey provided us with the current landscape of the financial institutions with regards to their current state, awareness, readiness, and capacity and willingness to adopt the open banking. And the result of this survey has been considered in drafting the relevant circular for open banking. In asking them what the top 3 most sought after information or use cases for open banking are, the respondent banks have responded with the following. payment and transaction requests, transaction and payment status, onboarding and know your customer facilities, product information, anti-money laundering compliance, other transactional account information, and the rest. We also did a comparative study with our peers, such as the Bank Negara, Bank Indonesia, the Hong Kong Monetary Authority, and the Monetary of Singapore. The journey among these regulators in developing an open banking policy framework has been similar. Start with the industry survey, followed by the development of a working group, and then a draft policy document that is open to the public for comment. All followed similar outlines in the general introduction of defining open APIs and the objective of open banking from the regulators' eyes, and often jointly from the perspective of the industry. All these regulators have issued guiding principles and a timeline. Several have implemented a phased approach to open banking. Initial phases focused on agreeing on standards that include data formats, open API architecture, security, and governance. At this point, the policy is still at the draft stage, but is certainly very close to finalization, and exposure to industry is imminent. The open banking framework will cover all technology, products, and policies that enable customers to securely compare and use financial services from qualified third-party providers. It will apply to all BSP-supervised financial institutions and other third-party service providers, such as account information service providers and payment initiation service providers. BSFIs will be encouraged to adhere to the standards in implementing open banking, which will form part of an API playbook and which will be developed separately by a governing body in line with the recommended technical standards to ensure industry-wide adoption of a standardized open API. These will include API standards on API itself, data standards, security standards, and outsourcing rules. To facilitate third-party adoption, financial institutions would be strongly encouraged to publish detailed API documentation online to accompany the published open APIs. The implementation of open banking standards would be done in tiers or categories based on their implications, opportunities, and risks. The tiers are use case based. They are not necessarily sequential, and implementations on multiple use cases may occur simultaneously. These tiers or categories include use of public data, customer identity related APIs, product, service, or pricing related APIs, and balances and transaction related use cases. The formation of some form of governing body is envisioned to be responsible for the standardization of open APIs. The preference is for this to be industry-led. It shall adopt its own rules on meetings, procedures, and the passing of rules on the implementation of the open banking conventions, including oversight over third and fourth party entities. The option of creating an API sandbox sponsored by the BSP is also being considered, given the possible costs associated with developing open API interfaces. In conclusion, the BSP maintains its open and flexible approach to financial innovation. Given the crucial role it plays in expanding our financial inclusion agenda, we will continue closely engaging with stakeholders, including FinTech players, to understand their business models, processes, and systems to be able to foster an enabling environment for technological development and innovations in the industry. We continue to adhere to a forward-looking approach to ensure that regulatory and supervisory frameworks are in tune with emerging trends and developments. That said, financial stability and public interest and consumer protection remain our top priorities. Hence, we endeavor to promote financial innovation while at the same time establish adequate safeguards to manage relevant risk. It's a balancing act, so to speak, so that industry can take full advantage of the innovations without compromising consumer protection, security, and financial stability. Through constant surveillance and monitoring of the market environment, the BSP stands ready to adapt to future challenges and opportunities ahead. Thank you very much and good afternoon.
Thank you so much, Director Perez, for your engaging talk. I'm sure with all the challenges, risks, and opportunities that you just highlighted, a lot of our participants are looking forward to the framework that will be launched early next year, hopefully. Thank you once again. Without further ado, we'd like to give the floor to Dr. Rob Ramos to conduct his talk about the wealth management sector.
Todd, good afternoon, Mr. Reyes and members of FMAP. I'm here to talk about the benefits of open banking for asset managers. Next slide, please. So what's number one? What's the first benefit that everybody thinks about? A lot of you here are fund managers, you work in trust or other forms of other forms of the asset management industry. The first pain that a lot of you feel is actually opening an account. Todd and Erika talked about it. Opening a regular savings account or checking account, fine, you can deal with it. There's probably 5 or 6 forms that you need to sign. For us in the asset management world, there's probably upwards of 15 pages at the least. It's even harder as your services become more and more complex. In terms of opening a relationship, if you want to do business with an asset manager abroad, the validation process of your KYC documents may take upwards of 2 months. So in this case, what can happen? What's the benefit? Well, you only have to do it once, and you allow your second or third asset manager to access the information from your first asset manager. So that's good. It's easier for you as a customer. However, what's the implication for those asset managers that you started with? Well, we better be on our toes. Now, when opening an account becomes so much easier, you have to consistently delight your client in terms of providing services and new products. Next slide, please. Another benefit of open banking, you have data, accurate, real-time data. So not only do I have access to my client holdings when I look at their financial statements in my system, with open banking, I am assuming I have access to their other statements. I can see their credit cards. I can see their savings account. I can see their checking account. I can see what they're buying. I can see when they're buying. I can see how they're saving and what they're investing in. So I could actually look at all these things and come up with, next slide, please, personalized and integrated products and services. I think at this point, with this real-time data, with this information, I can actually say, okay, these products and services may actually be a better fit for you. Right now, a lot of us lead using suitability and maybe the client's end goal in mind. And based on those parameters, I will say, okay, maybe I can help you invest in stocks, or maybe you shouldn't invest in stocks, you should invest in bonds and what have you. Now that I have this additional information, their spending patterns, their saving patterns, I can actually say, look, I can slice and dice the data a little bit better. I was initially recommending maybe equities for you, but I realized at the later part of the year, you spend a little bit more than usual. Maybe what do? Maybe equities is not good for you. Maybe we should stick to things that are more liquid. At the same time, with this data, I can look at my high net worth individuals. What products and services are they investing in? And say, okay, maybe I can tweak my products and services and come up with a better offering for them. I think that's what we can start with. And as we become better and better data scientists, what happens is, okay, I know the behavior of a group of my high net worth clients. How do I satisfy a wider group? How do I create new products and services to satisfy them? This is the next step. What is the implication also for asset managers in terms of customized data, having personalized information? I think one of the things that we understand here is that a lot of us were trained to be financial managers, you know, accounting, credit, Selling is a key skill. With access to all of this information, behavioral scientists suddenly are needed. Behavioral and data scientists are needed. We have to understand human behavior more and be able to integrate it in our financial planning practices. Point number 4 is open access for clients. With this, clients can access products across different entities. So they can actually say, now, okay, with Asset Manager 1, I want to buy UITFs. With Asset Manager 2, I want to buy their mutual funds. Asset Manager 3, I want their directed investments, their bonds, maybe some preferred shares. And Asset Manager 4, I want their advisory. And Asset Manager 5 will be my consolidator. And I can put everything in one app and I can see what I want and see what I have. Since I have digital portals, I can easily buy and sell across the different asset managers. So as a fundamental guide now for an asset manager, what do? We have been so used in the past few years at trying to be, good in a lot of things. You want to be good in servicing your fund management group for retirement funds, for your high net worth individuals, for managing your UITFs or mutual funds. Now with open banking, we start thinking, okay, do I have to be good in all of them? Or do I choose one space where I can be better in? Because my client can choose that one space now in the advent of this, and they can leave the other services that I offer if they're not satisfied. Next slide, please. Last but not the least, well, my firm is a big proponent of sustainability, ESG. So at least with open banking, what do we have? What do you do? There's less paper going around. With less paper, less trees being cut. In the end of it all, we're effectively more efficient. You don't, maybe right now you can open accounts with just your thumb mark using your phone, or you can transact using your thumb mark as well. So I end my short presentation. Tono, back to you.
Thank you so much, Rob. I mean, those are 5 obvious benefits, and I'm sure a lot of people quite appreciated it. So perhaps I can request the rest of the panel to prepare themselves, as we have received a number of questions, and we do hope to get a bit of insight from each one. Perhaps to start off, we do have a question directed to Mr. Mark Perez in particular. And the question goes, do you see BSP's role encompassing other financial institutions, especially given that the lines between banks and non-banks are being blurred? And in particular, how will the interplay be between other regulators, such as the SEC and the IC?
Okay, that's a 2-part question. So the first part of the question is with regard to encompassing a wider range of institutions. The Republic Act 11211, which amended the Central Bank Act, gave the Bangko Sentral regulatory authority over payment systems, providers, credit granting agencies, among others, which basically provides us with the legal framework to now supervise those institutions. Apart from that, there are existing fora that are actually currently being used together with, such as the Financial Sector Forum, where we work together with SEC, IC, and PBIC to align our policies and approaches towards FinTech. There is a subcommittee within the Financial Sector Forum that regularly discusses FinTech issues and policies such as this, so that there is some alignment that can be done among the different agencies that supervise the sector. It's also there so that we can avoid regulatory arbitrage and ensure that there's a high level of consistency with how each of the agencies approach the sector. Thank you.
Thank you so much, Mark. I guess one other question which was raised, and it's a little broad sweeping, so it's directed to anyone, or rather no one in particular. And I guess if an institution were really wanted to start and be part of the open banking, what's the suggested manner of actually starting it, or how does one go about starting to get into open banking? And again, please feel free, any of the panelists.
Maybe I'll go ahead because the question is how an organization should start, right? If they want to get into open banking, if that's okay with everyone. Yeah, okay, so maybe I'll just speak about our own experience and how we decided to sort of transform this or change the focus of UnionBank to become a digital bank. Well, for us, first and foremost, there was a necessary need to change the mindset, right? I think because of the COVID pandemic, everyone all of a sudden realized that there is a need to go digital. And the reason for that is more important now as people become used to the current lifestyle, and it's probably they'll learn new things that will continue to be carried on, meaning they'll just be doing banking transactions online probably forever because it's just simply easier. So yeah, one of the biggest things that you have to start is you have to start thinking about the mindset of the organization, just how important is digitizing for you. Why is it necessary? Those are things that you really have to believe in for you to be able to move towards another direction. Secondly, we also decided to change the way we did things, right? Like I mentioned earlier, you have to think about putting customer experience and customer journey first now, because competition has become so steep, people's lifestyles and mindsets have changed. And other than that, of course, you get back into the tech part. And what you do is, well, at least for us, is we went through most of our platforms, most of our systems, did an inventory, and we wanted to check how we could overhaul everything in an efficient manner. So yeah, we tried to move our systems away from legacy systems and to become a digital bank. So those are the three things, at least for us, and how we started to transform our business and move towards an open banking sort of model.
And I'll jump in from the FinTech side. I think, so Erika's exactly right. There's really an organizational requirement because thinking like a digital bank means, for example, managing some of the retail branch sales teams that may have KPIs associated with retail sales and branch, and that may create some conflict, right? So there are real like organizational changes that need to be considered. The other thing I'll mention, I mean, UnionBank admirably has undergone a really kind of a top to bottom IT systems transformation to enable open banking. But I want to emphasize that like it is not for an institution looking to launch open banking products, it does not require the bank to re-architect the whole system. It's not a binary 1 or 0 thing. In fact, I would encourage those institutions that are thinking about building or managing APIs or launching connections with FinTech partners through APIs, that there are ways to do it incrementally that don't require a 9-month or 12-month whole re-architecture. There are technologies available today that allow you to expose specific services and specific kind of data pipelines that allow for the connections you need without needing to mess with the core system. So there are low impact ways of generating the first set of initial use cases in a quite low impact way.
Thank you both to Todd and Erika for answering the question posted. I guess in terms of a couple of other questions that have been raised, and again, please feel free to interject your inputs. One of them is, what are the common security issues for early adapters? I guess looking for the general experience in Asia, and how do we potentially address these challenges in the Philippines?
Okay, maybe let me just, okay, maybe we'll also share a few examples that we've come across as we did our whole digital transformation. And one of the biggest things that we saw would be obviously with a free flow of information, so to speak, in other countries, there's still a lot of fraud. So that's one thing definitely that we need to look out for. And other than fraud detection, it's managing data privacy, right? So what other banks, at least in the other regions, did was, as Todd mentioned earlier, they reached out to those whose core business is fraud detection and data privacy, and ensuring that the data is ingested properly by their systems and their platforms. So yeah, those are the two things that really it's an early problem that you will definitely come across as you slowly open up your platforms and your systems into an open banking model. So yeah, and as a bank, we can't be a jack of all trades. We have specific core products, and definitely there are people out there that have these items as their main business. So then it's either a partnership model or even them as a supplier. But really, those are the things that you definitely have to watch out for with open banking. I think the regulators and the BSP also understand that that is one of the biggest issues, so to speak, of open banking. And that's why I think there really is a move for them to put more guidelines and policies into place so that these things could be easily avoided in the future.
Thank you so much for your answer. And I guess for the interest of time, I mean, I do realize that we've extended quite a bit. It's now 5 p.m. And I guess just to have one last question. We do note that a number of questions are really looking at cross-selling and the potential changes in rules regarding that. But likewise, one of the specific questions is looking at whether the open banking regulations will have any particular impact on the trust products in particular. And so I guess if we can invite Director Perez to answer these couple of questions from his point of view.
Thank you very much, Luis. Well, for one, with regard to the evolution of cross-selling rules, the way we see it is that as open banking comes up, then there are more products and services that can be offered by the financial institutions that engage in open banking, in which case there would be an increase in cross-selling activity. So that said, it would be a good time to revisit whatever cross-selling rules we have so that these changes in the markets can be considered. Now, with regard to the question with regard to digital KYC for UITFs, for example, well, for one, I think that's already being done by some financial institutions. Technology-enabled KYC is something that was issued by the BSP when I was still in the private sector as a retail banker. So, and I've been in the BSP 3 years, so it's been out there 3 years ago. I know for a fact that I, for one, was able to do an investment using mobile app. So in this particular case, I think that those rules are already in place to be able to subscribe to certain investment products. As for new regulations in Q1 of 2021, I am not aware of any at the moment because it's not part of my ambit. Sorry. Thank you. I can get back to you on that.
Thank you so much. Once again, we really would want to thank our speakers for their time and their sharing of their knowledge. And at this time, again, we do encourage any of the participants to still try to send in questions, and perhaps our speakers can still spare a few more minutes to try to answer them through the app. But once again, thank you to Todd, Erika, Mark, and Rob for your precious time and for the presentations that you all gave. At this point of the webinar, I would like to call on FMAP trustee Helen Oleta just for the closing remarks.
Hi, good afternoon. On behalf of Fund Management Association of the Philippines, we would like to thank all the participants from our regulator to the different members of the industry for attending this webinar as we learn about the power of open banking. We see what application programming interface can do and how digitalization has accelerated in the past few months alone. How advancement of technology can provide exponential learning opportunities and can drastically change our lives moving forward. As we embrace these changes, the pandemic also reminds us how we should live our lives, what we should truly value, and let us realize our highest potential. Actually, I believe the only barrier between yesterday's ways and today is us. Stay safe, everyone. Thank you very much. Thank you.
Hi,
This
Todd.
ends
To
our
Mark Perez,
meeting.
thank you very much.
Thank you,
Thank you very
everyone.
much,
Erika,
Mr.
thank you.
Noel.
Thank
Thank
you.
you.
Rob,
Thank you.
thank
Rob,
you.
Erika, thank you.
Thank
Todd.
you. Thank you so much.
Bye.
Stay safe, everyone.